Hi, welcome everyone. That was the closing bell for today, November 14th on Tuesday. We just had a huge day. We had that gap up that we were anticipating from the futures markets this morning, and we just started trading higher throughout the day. So let's see how that developed. Let's go ahead and take a look at the daily chart. So you can see right here that we gapped up a huge amount and we just went higher. Now in the morning video, we said, hey, we gap up, but we would be limited to the upside so that if we saw any weakness, then we wanted to play things to the downside. So we didn't get that weakness. So obviously you can see that we gapped up and the open was the low of the day. We just kept on trading higher. We did hit this horizontal resistance right here, or this local high right here, and that did stop us from moving any higher. And that was a point that we identified. We'll take a look at the 1 minute chart in just a moment, but we stopped ourselves right exactly there. So tomorrow is going to be critical. However, now that we've done this, now that we've had yet another gap up and move upwards, you can see that we're up to about 2% today, 1.94%. So remember over here, we showed you this bar in the pre-market, it was 1.92%. So we were saying that, there's that we're going to be that's going to be pretty close to the limit that we would see. And we actually got that today. So now that we're up here, we had another gap up, and now things are looking really, 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 really strong for a pullback. If not tomorrow, then Wednesday. And I have very high conviction for this, so I'm very comfortable saying that. Normally I might say, oh, it could be tomorrow, it could be Thursday, it could be Friday, it could be it's coming up soon. It is, everything in this market is pointing to tomorrow and maybe Thursday at the very latest. So all of the reasons that I've been talking about last week are still in play, but now we have a couple other things that have developed. We are still overbought on our RSIs, but two very important things happened today that we didn't have before that are making it even stronger possibility that we're going to pull back tomorrow. Number one is we gapped up and then traded higher into this resistance. So we're going straight into resistance. Now that happened over here also, and we did pull back very briefly and then went right back up. So we did see that pullback. Now we're hitting that resistance again, a gap up into resistance. It's going to be a higher probability that we're going to pull back, but that's not the only reason. We have a gap up. We should fill that gap. So that's a second reason. A third reason that we didn't have before that we do have today is now our prices are at that +3 ATR level, and prices tend not to stick to +3 ATR level. You see here, it hit the +3 ATR, came down. +3 ATR came down, actually hit it over here, and then it crept up a little bit, and then it came down. But here, hit it, came down. So we have a tendency to approach or hit the +3 ATR. If we do, it's rare that we touch it, but when we do, we will come down. And we always come down within a week, okay? But oftentimes we come down pretty much right away, okay? So I just said a little bit earlier, I have very high conviction that it's going to be tomorrow or the day after. So this by itself doesn't give me enough conviction that it's going to be in the next 2 days. It gives me a pretty high chance though. You can see that a lot of the times it did pull back, at the very least some, before resuming an upward movement. So why do I think it's not going to be one of those cases where it follows it up for a few days before pulling down? Well, we have our little secret weapon right here, our 20-day breakouts. We have 577 20-day breakouts. This is crazy. And they're only 16 20-day breakdowns. Okay. So several weeks ago, you may have recall that we were looking at the 20-day breakouts and breakdowns as well. And I said, any time there's a really extreme imbalance where you have maybe 100 on one and 400 on the other one, 400, or I only have a few dozen on one and 400 on the other, that is an extreme situation that will revert itself and correct itself very, very quickly. And this is not even 400, this is 577. So we are in extreme overbought territory. And so for all of those reasons, on top of all the reasons I talked about over the last week, now is a very, very high probability time that we're going to pull back. So we'll talk in a moment how we would take advantage of this. We look at this is the S&P 500. This is the chart that we went over today. We said that it'd be difficult to pick lines because of that gap up and strong movement upwards. And we were right. We didn't like these lines were useless to us during the day, right? These bottom three. Okay. But we also picked that possible overhead resistance and we perfectly touched it towards the close of the market. In the last hour of the market, we perfectly touched it. That served perfectly as overhead resistance. We also had some resistance right here, not quite at that level. But if we look at what that value is, it was about 449 and a half. We did talk about that in the morning, but 449 and a half is right about this 449 and a half. Am I getting the right value here? 449 and a half. Yes. Okay. So 449 and a half is pretty close to where we closed. Okay. And that is pretty much in the exact same region. Okay. So this possible overhead resistance that we identified in the morning actually was the resistance. You can see how we reacted perfectly to it towards the end of the day. So the star of today, though, if you recall back from the pre-market training, was that this VWAP line. I said we don't have any horizontal resistances we can rely on. So what we're going to rely on is this VWAP. And if we move away from it, we're going to expect it to pull back. And if we come and we touch the VWAP, we want to look very carefully if we have any sharp indications of a breakthrough. And if not, then it's just going to bounce. And so we did. We moved far away. We didn't have a really good way of sharing with you how to identify this is far away, but we can. It's too much to go into now. It'll take a whole lesson to help you identify these levels. Just know that this was far away, and that's why it pulled back. Okay, so if this is far away and so it pulled back, well, look at this over here. This is probably far away also. This is about the same distance. If I go from here to here, that is 2.07 or 0.46%. If I go from here to here, that is 1.83 or 0.41%. So very similar values. So based on this one, I know that 0.4%, it was roughly a place where I can expect things to possibly pull back to that VWAP. So I wouldn't have known that on the first one, but I would know that over here. I wouldn't have caught this one because this was a baby move. It wasn't nearly 0.4%. This was 0.2%. But when I saw this one, and I saw that was 0.4%, that is a decent place for me to believe that the price is going to pull back. Now, this one's very risky because it's very close to the close. And so there is no guarantee that it will pull back to the VWAP by the end of the day. So I personally would not have traded this one because it was too close to the close. It just happened to work out this time around. So that VWAP line is very helpful for you in day trading, especially when you don't have horizontal lines to rely on. I just wanted to show you that possible overhead resistance was exactly what we had identified on this daily chart over here and this local high, and we got it. So there's so many factors, so many forces showing us that it's time for a pullback. Not a huge pullback, just a pullback, just a fill of this gap, maybe come back to this breakout point where that MA90 and EMA8 are now converging, or at least halfway through it. Those are normal for pullbacks. So at this point, we're no longer considering this possible area of retracement that we have right there. We're not really even considering the EMA20. If it does come to EMA20, that's further down the road. That would be more of a next week type of thing. Right now, we're just expecting over the next 1 to 2 days that this is just it has to run out of steam sometime. It's going to pull back at least a little bit, just like this. It just pulled back, and all I need is 1 day pullback, and then it can move on, but more than likely a couple days, 2-3 days before we start moving back upwards. So that is what I'm looking for tomorrow. If So how do I decide? How do I decide what to go into? Well, if the whole market is going to pull back, then all I need to do is look for things that are weak to the market. What does that mean? I had a gap up and move upwards today of 2%. Well, what if something was just flat today, or if something was down today? Or maybe it also gapped up and moved upwards, but then stalled out and just did a doji bar. Those would be all excellent scenarios. So one that I caught just at the end of the day was Microsoft. You see that? Right here, it didn't even gap up. Well, actually, it did gap up, which is a baby gap up. And then it traded down. It already filled its entire gap and then traded back up, but it ended as a red bar, and it's not that much higher. It's 0.98% higher, but this close right here is 396.67. This close right here is 370.27. If I take a ruler here, I don't even know if I could draw exactly how high, right? It's like 0.13%. So Microsoft is weak to the market. Now, the reason why I like Microsoft as a potential pullback play rather than, I would also like anything that broke down that had a red bar is actually closed less down rather than up. But Microsoft is a good play because it is also at its +3 ATR, and it's been there for a few days. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. 6 days, and that is an unusually long time for us to be at the +3 ATR. So again, you can see here, touch it, came right back down. Touched it, came right back down. Touched it, came right back down. Right? Touched it, came right back down. Touched it, came right back down. Touched it, came back down. Touched it, came back down. So we don't stay at that +3 ATR for very long. And when we do, it's a rare. So we touched it, came back down here. 1, 2, well, I'll consider that touching 1, 2, 3, 4, 5, 6, 6 or 7 days right there. And then we have 1, 2, 3, 4, 5, 6, 7, 8 or 9 days right here before we get that real pullback. You see that I was struggling right here, but the real pullback came right over here. So now I've had 6 or 7, 1, 2, 3, 4, 5, 6 of these in Microsoft at its +3 ATR. I'm at a point where I'm expecting a pullback in the market, and I am at a threshold where it's normal for Microsoft to pull even though, so it's already unusual behavior that it follows its +3 ATR up. But when it does, it seems like 6, 7, 8, or 9 days is how long it stays up there. So I'm really anticipating, if not tomorrow, but within the next 3 days, by the end of this week, we're going to see that pullback down back into a +2 ATR or +1 ATR or EMA 20 right here. So my trade for the day, it's been a little while since we've done one of these, as we're going to go short Microsoft. Long put on a Microsoft, December 15th. Let's give it a little more time. Let's do January 19th, right at the money, 52.5 put. It would be a $1.44 or $144 investment. Let's just go ahead and save that trade. And that'll be the aftermarket November 14th example. This is Cisco, Microsoft 370 put. So the current price is at 370.31. So this is the at the money, January 19th. We'll go ahead, and this would be a $1,127 investment. So at $11.27. So we'll go ahead and save this as the aftermarket for November 14th trade. Okay, guys, hope you guys are learning a lot. That's going to be it for today, and we'll see if we get that pullback tomorrow.